trailblazer because I am an overachiever of note. It's one of those moments in my life when I was saying to myself, Tokiso, you studied finance, you know all the financial concepts, but you're not applying any of them to your personal finances. You have high levels of debt, you have no savings, you are using credit to finance a lifestyle, you are using credit to finance your clothing and how you look. And if anything was to happen, you are also robbing yourself from your future.
What's up, everybody? Welcome to the MediaSpace Podcast, a podcast brought to you in part by MediaSpace Inc., a marketing and advertising brand strategy agency, and Ghetto FM 104.0 megahertz. If you are a fan of the show and you are new and you are a fan of the show internationally, go ahead and listen to the live every Friday, 1800 CAT on www.bgetofm.co.ls. That's www.bgetofm.co.ls, or go to every social media platform we have everywhere on the internet, really, or go to www.mediaspaceinc.com/MediaSpace Podcast. Thank you for watching, and if you are listening on the audio feed, go ahead and hit the follow button and rate us 5-star. My name is Mr. Mashivani, and you are watching and tuning into the MediaSpace Podcast. We are here forever. This is episode 6. Is it episode 6, BK?
Episode 6.
Yes. Okay. Yeah. I'm so nervous. That's why I'm making a lot of mistakes. Maybe let's have our music play in the background so that I don't mess up a lot. Today we have Mr. TK, Mr. Tokiso TKay Nthebe, and be very careful when you write the name. It's T, capital T, capital K, A-Y. It's very important because that's one of the things that I remember when I was talking with him when we were preparing for the pod. And he is the founder, managing director of TKO Financial Wellness Advisory. He is a host at Escapades with TK, and he is also a podcast host at My Money Adventurous, and he is a finance guru. I saw it in a print. You are a finance guru. So
I saw it too. I was like, whoa, okay.
I was talking with my brother about I was like, what does guru mean? Because look, it's made to be a bad thing to be a guru, especially in the age of content everywhere on the internet where everybody is a guru. I can literally pop up every day and say I am a guru in A, B, C, and D. But we'll have that conversation. How are you, man?
I'm feeling good. Thank you for having me. I've been seeing the podcast grow, and I'm like, I'm loving this. The colors also speak to me as well. There's something with blue.
Okay.
I don't know if you know, but blue also represents wealth.
Okay.
So when I saw the colors, I was like, yes.
Okay.
Tick.
I actually thought it's green, but we'll talk about
Well, it looks like blue for me.
Blue and green, it works.
Sure.
Okay, that's awesome. And Tumelo asked me, why does every company that you are involved with has blue in it? I'm like, well, I have so many reasons to love blue, but one of the reasons could easily be blue just works. It just looks good. You know,
It looks good. It looks clean, and it looks wealthy.
Now you heard it from God, he is the finance bachelor. I almost messed it up trying to say he is in finance. No, he is the finance bachelor, not the finance guru like you guys are saying. But we'll get into that later. We had Adrian, who said he is. When I asked him, who is Adrian? He said, Adrian is the best. Adrian. So,
oh, wow.
So we're looking into an amazing introduction. So please, Mr. TK, introduce yourself.
Ooh, so my name is Tokiso TKay Nthebe. I am a trailblazer because I'm constantly blazing the trail, be it in content, be it in finance, be it in lifestyle, be it in travel, be it in life in totality, you know.
Oh my God.
I'm a very humble, very shy, contrary to popular belief, very shy guy, but I am an overachiever of note. So if I set my mind to something, I get started and I will not stop until I achieve it. If I do stop, it's when I'm taking a break, re-strategizing, regrouping, and all of that. But yeah, over and above that, I am very passionate about finance. I'm very passionate about travel and lifestyle. I am a content creator. I host 2 shows, like you mentioned. One is a personal finance channel, My Money Adventures with TK. And the second one is Escapades with TK, which is more me. The finance side of TK is fun. But if you really want to see TK or Tokiso in this context, Escapes with TK is where it's at. Fun, engaging, loves to travel, very shy, very humble, but also has a very larger than life kind of personality. Yeah.
Okay, now
did I level up?
Now that's an introduction. Whoever is coming to the pod,
level up.
You gotta be better than this. I think we gotta push the bar so high that people, when they come to the MediaSpace podcast, they're like, we gotta practice an introduction.
An elevator pitch is where it's at. Elevator pitch is where it's at.
That's gonna be like, we gotta work on the intro.
Sure.
Even if it's a person with a PR team and everything, they're like, no, dude, don't worry about that. Let's focus on your introduction on this podcast. And it is very exciting, especially when we are at the beginning and we're finding our crowd. And thank you very much for coming to our pod and taking time out of your busy schedule. We couldn't even reach you in the morning when we were preparing for this. Like, whoa.
Really?
Yeah, you were very busy.
No, so I was in a meeting when you guys called, and fortunately, because I needed help, so I have a brilliant young man who is helping me take care of my schedule. So as I was in this meeting talking about pension funds and all these hectic things, I gave him the call. I was like, please attend to this.
Okay.
And yeah, but thank you for having me. I'm very excited to be here.
I'm very excited to have you here. I don't know what I'm gonna learn, but I know I'm gonna learn. And by the way, we only have one rule on this podcast.
Sure.
It has to just be a conversation.
Oh please, yes.
It's not an interview.
It's not an interview. It's not a master class.
This is us talking,
and it's also not Friday.
It's also Friday, so nobody wants to hear you tell us about a lot of complex words.
Sure.
By the way, you're gonna hear a beep on our time clock.
Sure.
Don't let it distract you.
Okay.
It just means we're an hour in.
Oh, okay. Time is money.
Time is money. Yes. Now we believe it from a finance bachelor. BK, what's up, man? You're not your ghost guy.
Your ghost guy today.
I hope I am audible.
No, you are. I can hear you.
Okay. Yeah. I'm good.
How are you?
I am great.
I see.
Great. Very excited.
Yeah. We are very excited. I don't know if we're gonna be able to ask you any questions.
Please ask the questions. I'm here for the questions. I'm here for the conversation.
I've never seen him so nervous.
Excited. Especially for a public speaker.
Especially for a public speaker.
I can feel his energy from here.
Yeah.
Like, I need to calm down.
Let me just lean into it. Let's just lean into it. First off, we asked you who is TK. I don't want this to be scripted, by the way, but do tell us about what got you into finance. Why did you decide? Okay, because I strongly believe it's not necessarily something you were like, you know what, I'm gonna get into finance. So I want to understand how you actually chose this path and decided, okay, I'm the finance bachelor. I'm going to do finance professionally for long term, or let's say for as long as, because I still believe career what is it, career switching or career path pivoting, etc. What got you into finance, and why are you so passionate about finance?
All right, that's a good question to kickstart the conversation. So growing up, I was very smart, still am very smart. But like any other young, passionate boy, is you ask the question, what do you want to do when you grow up? You know, hey, I want to be a doctor. And at some point, my sister was like, you are smart enough to be an actuary. I was like, I don't know what that is, but it sounds fun and sounds smart, you know. So fast forward, went to varsity. So I went to boarding school at the age of 7. So from 7 till matric in South Africa, I was very, very independent because boarding school forces you to grow up. So from boarding school in the Free State, I went to university.
Free State, South Africa.
Free State, South Africa.
Okay.
So I was in Bloem, matriculated from St. Andrew's School in Bloem. And then I went to the University of Pretoria in Gauteng, right? So fast forward before I went to varsity, matric, I like to believe that I'm a multi-potentialite. Okay. Multi-potentialite is simply somebody who's got interest in many different things, very different things, and they are very good at all of them at the same time. So the challenge with being a multi-potentialite is you want to pursue all those things at the same time, which is not always possible. And then secondly, you are great at all of them, so you don't know which one to choose and which one not to choose.
Okay.
So in matric, I was doing speech and drama, I was doing accounting, I was doing sciences, I was doing math, I was doing all of those, you know. I was also very active culturally in the cultural activities. I was doing a bit of sport and all of that. So now, obviously, varsity, you have to make a decision of which career do you want to pursue.
Okay.
So at the time, I was good at accounting. I had established that science is not my best subject.
Okay.
I was doing very well in chemistry, but not very well in physics. And for you to qualify into med school, you need to be good at math and science.
Okay.
So, I was like, okay, fine, let's pass.
So med school, medicine was an option too?
It was the only option. Okay. So at the time, it was the only option. At the time, my aunt was a doctor. My sister was pursuing a BCom. So these are people I looked up to. So medicine sounded like remember I said I was smart. So medicine sounded like the smart thing to do. Fast forward, apply for university, and I decide maybe medicine is not the route I want to take. Let's pursue something in commerce. And then I applied for a BCom. So now the question is, which BCom? Because there's also levels to BComs.
What's BCom?
Bachelors of Commerce, right?
Okay.
So there is a Bachelor of... So it also has a hierarchy as well. So if you're doing a BCom accounting, if you're doing a BCom investment management, a BCom finance, so if you're doing all the other BComs, it looks like you're weird, right? Or not smart enough. And for me at the time, being smart was a measure of success.
The
BCom. So I didn't like BCom accounting because it was too specialized. I didn't know what BCom investment management was. So I applied for a BCom financial management. So I did that. I double majored in tourism management. At varsity. So this is where the escapades with TK comes in, and this is where Money Adventures comes in. So completed an undergrad in BCom Financial Management. I did an honors in financial management, came back to Lesotho, and I started working as a graduate trainee for one of the commercial banks. Right?
That's a lot of school.
That's not even the half of it. That's not even the half of it. Fast forward, start working in corporate Lesotho, working for a bank. And if you work for a bank, there are common mistakes that you are most likely to make. I'm talking about high levels of debt, because when you work for a bank, you have what is called preferential interest rates. So I had a car, the same car that I've parked outside. 11 years later, I bought that car and I did not afford it. Second one is credit cards. If you live in Maseru, there used to be a spot down Kingsway. And every Thursday, it was on the first floor.
Do I know this place?
It was on the first floor. Yeah.
I know this place.
Yeah, you know this place. So every Thursday,
I've never been there, by the way.
every Thursday, Friday, Saturday, and Sunday, I used to be there. And obviously,
how many days?
Thursday, Friday, Saturday. Because Thursdays are 4 days.
The weekend.
It's the weekend. So Thursdays, you are there. You are literally spending money. And how I was financing this particular lifestyle was with the credit card that I got from the bank, right? So people don't know that you are using credit to finance the lifestyle that you're financing, right? The third one was, there's a store in Pioneer Mall where I used to frequent every Thursday, because when you work for the financial services industry, the way you're dressed right now, that's you every single Monday to Thursday. So Friday, you are allowed to tone it down a bit and just look like a decent human being.
I really don't like toning it down. I'd wear a suit every day, Monday to Monday. I actually enjoy the suit more than...
That's good. So I enjoyed it as well, but Fridays were my days where I needed to look good. So in pursuit of looking good, I used to frequent this retail store and I'd buy clothes on credit. Yeah. So fast forward many years later, I am highly indebted. I have no savings. I have no investments. And then I left that particular company to join another company in the telecommunication space. And the biggest mistake that I did is, when you change jobs, especially if you're employed, is your retirement benefits that you've accumulated get paid out. And I spent those benefits.
That's new to me.
It's one of those moments in my life when I was saying to myself, Tokiso, you studied finance, you know all the financial concepts, but you're not applying any of them to your personal finances. You have high levels of debt, you have no savings, you are using credit to finance a lifestyle, you are using credit to finance your clothing and how you look. And if anything was to happen, you are also robbing yourself from your future by spending your retirement benefits, you know. So for me, that's where the passion started. So I've always loved finance, but where it really became a big moment in my life and my career was when I had to sit down and my finances were rock bottom. My mental health was in tatters. My health was starting to take a strain because I was constantly worrying about finances. Payday for me was one of the most depressing days because you get paid and as quickly as you got paid, the same day, you're back to square one. You're back to square one. So it was in that moment that I realized that I needed to do something very differently. So it started with a blog post because I've always loved to write. I always loved to blog. And I
And you sound like a person who likes writing.
I do. I'm a whole author, guys. I'm a whole author. It started with a blog post that I called my 7 biggest financial mistakes. In this blog post, I literally ironed out what the mistake was, how much my debt levels were, how much I was earning, and I published it onto the internet. Now, obviously, if you are living in the internet world, you know how vulnerable and how vicious things can get when you share such information on a public platform, right?
Platform, yes.
To my surprise, after I uploaded that particular blog post, is people started engaging with the blog post saying, wow, I can relate to this. I'm going through this. I'm going through that. And that sort of kind of birthed the career I now have and the company that I now run. Yeah.
So that's the a better story of starting a company.
That is
Really, really, because if you ask any entrepreneur, why did you start what you started? It's always, well, I saw a gap. But TK actually has a better story into how he saw the gap. It actually starts with him. That's why he's so convicted and believes in what he does. And that's really amazing, especially in a space where we are. I was watching some video on YouTube that mentioned it's an economist. He mentioned that we are in the age of easy money. So I'm saying in the age of easy money, it's so rare to find someone who's really convicted into what they are building, and it's very exciting to experience, especially on the MediaSpace Podcast. Do you have any questions for TK?
It's more an acknowledgement. Like he said about the story. You know the saying, experience is the best teacher?
Absolutely.
Yes.
Yeah.
Listening to you talking about this, for me, is also new. But I think the three of us probably have our own experience.
Absolutely.
Yes.
If you don't have any experiences with money, I'm going to look at you and be like, wait, what's happening?
My parents are both in finance as well. But believe me when I tell you that I'm also in the process of learning how to use money, how to invest money, how to go through all that, and experience is that best teacher, because I went through a lot last year. Remember what I was telling you? I was going through a lot because of debt. So I also wanted to put something on the internet, but the fact that you did that already and people were engaging is basically crucifying yourself and being afraid of what's going to happen.
Being judged,
and being judged,
yeah,
because
being
also
judged.
people were going to lock that in their minds, and that's a version of you that they're going to keep. But the fact that you're learning from your mistakes and then giving that info to us, this is very beautiful, and I
Thank you. Thank you. I appreciate that. Thank you.
By the way, I have no debts. I've always hated debt. That's one. Well, I've always hated owing someone.
Sure.
You know, not necessarily for an egotistic stand ground, but I hate how I feel when I owe someone something. Yeah, not necessarily money. So I want to understand, how do I fix my relationship with credit? I'm more of a financially Dave Ramsey, who is more conservative with, it's better to just get everything in cash.
Sure.
Or don't get it at all. You don't afford it.
Sure.
So I want to understand, for anyone who's watching and listening, how do you fix your relationship with credit, and how do you do credit the right way?
That's a good question. So for me in answering that question, I always go back to the 2 things that I mention every time I'm asked that type of question. The first one is to understand that personal finance is personal. That's why we call it personal finance. So what you like and what I like and what you believe about money and what I believe about money and how I manage money and how you manage money will be very, very different. We have different goals, we have different priorities, we have different backgrounds and relationships with money. The second one is to also acknowledge how you relate to money. So every single person has a money story, whether positive, whether negative. And this money story is shaped by many factors in your life. How your parents use money, how your parents role modeled about money, how your family, your uncles, your aunts, your community modeled around money, because that shaped how you perceive money, how you use money, and what you believe about money. So the third one is to know who you are. So each individual has, just like you have a personality, each individual has a money personality. And those factors that I mentioned will shape your money personality in one shape or form. It's either you're an impulsive spender, it's either you're an excessive spender, it's either you're a compulsive saver, or so you need to know who you are, and you need to interrogate those beliefs about money first, right? Now, once you know yourself about money, then you can only start to say, what's my relationship with debt? So debt can be, in my view, debt is psychological. Debt can be empowering or debt can be disempowering. Depending on your background, depending on how you grew up, depending on how you experience debt or people around you experience debt, that will shape how you also perceive debt. So debt is not bad. Debt is not good debt is not bad if you know how to use it well. And debt can be very bad if you don't know how to use it well. So first and foremost, let's understand what debt is. Debt is where you borrow money from another person in exchange for an interest that you'll pay for borrowing that money, and obviously agreeing that I'll pay this money on a particular day, right? So if you don't know why you are borrowing the money, or the reasons you're borrowing the money are not solid enough, and they're also not supported by a repayment plan, and you also don't know how much this money that you're borrowing is going to cost you, then you are well on your way to have a very messy situation, right? So debt is not bad. In fact, debt can help you achieve so many of your goals if you do certain things well, right? But if you don't use it strategically, and you don't use it, if you don't understand the principles that govern debt, then you might find yourself in a very tricky situation. So a lot of people go into debt blindfolded, and they don't ask the right questions because they are also desperate. They get themselves into really messy situations. So in my view, debt is good, but debt can equally be bad. Examples of good debt is where you take money at a cost, and then you use this money in order for you to achieve certain things. Be it a house, be it pursue your qualification, be it to invest in your podcast like the MediaSpace, be it to start a business, be it to take your kids to school, something that is productive, and that's something that will hopefully help you achieve another source of income or improve the quality of your life. Debt where it's consumed or used for consumption purposes with no promise of a return, that is likely going to be problematic for you in the short, medium, and long term.
Wow. Okay. That was therapeutic for me. That was really therapeutic for me because, well, I think, like you said, it's basically your personality around money. So, how do you explain? Because some people say, this debt is expensive. This debt is cheap. We have cheap debt. We have cheap, expensive debt. I don't want to act like I know.
Sure.
So explain what cheap debt is and expensive debt is.
Okay. So it's very important to also understand, again, the components of what debt is, right? So before I even get to that question, there's also this magical thing that we call a credit score. So a credit score is a 3-digit number that basically tells the next person. It's okay. Zero judgment. So the fact that we're talking about it hopefully will help you and somebody else to understand that, right? So a credit score is basically saying TK is this kind of person when it comes to managing debt. Do they pay their debts on time? Can I trust him with the money that I'm giving him? Is he a credit-worthy citizen, right? So a credit score, this 3-digit number, basically sums up that personality to say that, can I trust you with this money? Imagine for a second you walk into my house. I've never met you from a bar of soap. I don't know who you are. You knock and you say, yo, TK, can I borrow 10,000 rands or 10,000 maluti from you? Am I going to give it to you?
No.
Why wouldn't I give it to you?
I don't know you.
I don't know you. I don't know where you come from. I don't know what. I don't trust you. I don't know anything about you. So a credit score basically says to any financial services provider or any credit provider to say that when you walk in, they are able to pull it up because it's got a track record of who you are. And that basically says to the person that I can maybe somewhat trust this person based on the history, based on the repayment of previous loans, based on the character, based on the credit worthiness and the trustworthiness. So that's that number that you need to protect. So you need to protect it with everything that you've got because it can open doors for you and it can close doors for you. How does it open doors for you? If you've got a good credit score, so it's a 3-digit number, the higher it is, the better and the more credit worthy you are. If it's higher, you are then able to say to a financial service provider or a credit provider to say that I am a trustworthy person. You can trust me with your money. I will pay it back. Then they will say, maybe we can give you a lower interest rate. So when we speak about interest rates, because we can trust you. So when it comes to interest rates, you also need to understand what is called secured debt or secured lending and unsecured lending. Secured lending is where if things go wrong, I've got something, an asset that I can go take, resell and clear off the debt. And unsecured lending is where I have absolutely nothing. So I'm giving you my money blindfolded and I'm hoping that you will pay it back.
Without collateral.
So the other word for secured is collateral. So that's when they ask for collateral. Examples of collateral can be property, can be investments, can be tangible things that have value, assets, that I can go resell, get my money value. For a value to clear off the loan.
In Lesotho, because I've realized that everywhere in the world, like in the United States, when you hold stocks in some companies, say I have a stock, I actually hold Bitcoin. So say I have Bitcoin. And then I can borrow against my Bitcoin. Is it a case in Lesotho or say anywhere in Africa?
So it depends on the market, right? The bigger the market, the better. So in the case where a country like Lesotho, firstly, is there a stock exchange in Lesotho? Yes, there is. There's a Maseru securities market. Not as active as it should be.
Just learned about it today.
Exactly. So for you to be able, remember what the bank's core business is. They lend money at a profit or at a margin in order to make a profit, right? So if they are to say you're going to use your stocks or your Bitcoins as collateral, how quickly can they sell it in the market that they operate in? So if it's not very easy for them to sell it, then that collateral is not ideal to them.
Okay. Does it mean when you say in the market that they operate in, does it necessarily have to be a market that they operate in? Because say I've looked at the banks that are in Lesotho. It's only one that's local, but most of them are actually international. They are run by big corporations,
multinationals.
So say when you say in the market they operate in, does it mean because Bitcoin is international and I can literally sell my Bitcoin in less than 5 seconds?
To who?
To a buyer.
So
in the market exchange, in the Bitcoin exchange, I can say, okay, I'm getting rid of my Bitcoin. I'm getting cash for it easily because, well, that's what the internet is there for, and basically what transacting with Bitcoin looks like. So I want to understand. Say I hold, I think Bitcoin is worth $61,000 now, $61,000. Say I hold one Bitcoin, and I want to have a loan, say for 500,000 maluti. That's less than $50,000. So I say I hold 60,000 worth. I'm borrowing 50,000 worth of debt, and then I have that as collateral. Are they going to be able to say, okay, sell your Bitcoin and pay us back, or is it a decision up to me, or how does collateral work?
I love that question. I'm going to go back to the example that I used earlier on, just to bring context to it. So you come to my house. I don't know you from a bar of soap, right? and you say, please borrow me 50,000 or 500,000 malut, right? I've got Bitcoin that's equivalent to $60,000, for example, right? And if things go wrong, you can take this and then you can go sell it and then cash out and recover your money.
Okay.
How likely am I going to trust you with that?
It's easier now because I can literally give you my crypto wallet. So
again, context. So you give him your crypto wallet.
You don't know how to use it.
I don't know how to use it. Okay. I don't know where you are. So what I'm trying to basically drive at is, as much as the world is open, there are different laws that govern certain things.
Okay.
There is then the valuation to say that you are saying that your wallet is worth X amount. Is that the kind of collateral that I want? Okay. Let's also understand and appreciate how banks work, right? I think a lot of people think that banks or commercial banks in particular, are charity cases. How banks make money. You come to the bank and you say, I've got 50,000 maluti that I would want to grow in the next year or so. The bank will say, I'm going to give you a return or an interest on this loan or on this deposit that you're making at, for example, 10% per annum. Okay. I come in and I say, I need capital to start my business. I need 50,000 and I'll pay it back in the next 12 months. They've done a credit check on me. They know who I am. I look decent and I look creditworthy and trustworthy. They then say to me,
so you actually have to look creditworthy, or is it just in your credentials?
You do.
Because you can have all the credentials.
You do.
Not look creditworthy.
You do. That's where the credit score is. That's a measure that basically it's a benchmark that they say, if you have a credit score of this much, then we can sort of kind of trust you.
Okay.
But the character
still comes in. Do they even look
at
where you spent your money?
They look at, so I'll get to that. So they do. Because again, I want to use that example to say that if I was to come into your house and I don't know you, will you be free from me? Will you feel comfortable?
I'd even call the police on you.
Exactly. So why do we want to treat banks or financial services companies differently? Okay. If I was to come to your house, am I going to open, if you didn't call, number one, I'm not going to open the gate. Now, if you do get in and you get to the front door, I'm not going to let you into the house, let alone let you walk through my bedrooms, my bathrooms, and all of those. I'm not going to do that.
Then even ask for money.
Ask for money. The same thing applies to banks. Banks basically say, we don't know you. We can assume who you are. We don't know who your character is. We have these bases, but we also are in the business of making money. Yeah. And for us to make money, back to that example, you are depositing money that you want to grow. I'm coming to the bank and I want to borrow money that I need to grow my business. Remember, we said that loans come at a cost.
Yes.
So the bank said to you, they'll give you 10%. They say to me, okay, we can borrow this money at maybe 15 or 20%. Right? That 20%, 10% of it goes back to you because they made a promise for keeping your money. 10% or 5% needs to pay operational costs, salaries, and all of those, the services that they provide you with. And 5% goes to the people who put their money into the bank so that they can make a profit.
So the banks are not listening to you explain where the money goes and who is involved.
It's a business.
It makes sense now.
It's a business.
Because the typical TikToker would say, when you deposit your money into the bank, they only give you like 0.001% return on the money that you give them, and then they make like 40%. Now I understand where the money is going.
It's a business
because they're actually running at a cost. I've realized someone mentioned that banks. I actually have a friend in banking. He's an executive in a bank. He mentioned that they actually spend over 30 million maluti per week on the softwares, on the systems, basically. Security platforms.
Securities.
So I was like, wait, what?
I used to work in a bank, like I mentioned, just to run one ATM. When you look at those costs to keep it up and running, just to make sure there's what we call cash in transit. If you've seen these cash vehicles, the costs that are associated with running those cash in transit vehicles are insane. So there's a lot of costs that go into banking. So for me, I think the biggest takeaway that people need to understand is a bank is a business. Just like MediaSpace Inc. wants to make a profit and grow your wealth, the same thing applies. Banks are funded by ordinary people who've put the money into the bank as investments so that one day they don't have to work hard for the money. So they demand a return on their investment. People who work in a bank went there because they're professionals and they're looking to earn an income. So they are earning. They're exchanging their skills and thing to earn. So they're also there to make money. So we need to move away from the fact that, yes, you can access debt from a bank, and also understand where the source of that debt that you're looking for comes from. It comes from depositors who are looking to grow the money.
So my takeaway from this would be, if I run a business and I want to move my money, I'm going to pay more than, like you said, cash in transit costs a lot.
It is.
Because
there's security, there's cars, there is risk. There's a lot of risk.
So if I run a business, say MediaSpace is running a cash flow business where people actually spend cash into the business. They give me money, I give them, let's say I sell a product, they give me the money, and then it's racking up. Now I need to move this money. It's either I use cash in transit, or I
so also remember, now once the cash has moved, right, it needs to be kept somewhere. So it's kept in a vault, right? And it's kept in a vault because you don't want people getting access to it.
Into the money, yes.
Now, once it's in the vault, which is another cost because there's security for the vault, now there's also the people who actually need to go count that money. Right? There are people who need to count that money. That's why there's a lot. That's why there's a big movement towards digital payments, and all because cash carries. Yes, cash is king, and but it also comes at a cost. So I think the point that I wanted to drive was we need to understand that credit is not bad, but also banks are in the business, and the core how banks make money. There are two basically income streams on how banks make money. They make money from what is called net interest income. Basically, net interest income is they pay you, who is depositing your money, and interest, and they earn interest from the people who've borrowed money from that. So the difference between what is paid and what they've earned is the net interest income. That's the biggest source. The second one is what they call non-interest revenue. So this is where they make money from bank fees, your service fees, and all the things that they charge you, point of sale devices. That's where they make the money from, right? So at any point in time, banks will be out to borrow people money because they are earning interest so that they can pay people who've deposited money into the bank their interest, and then keep the difference so that they are able to pay the shareholders who've made that bank operate and who funded the operations of that business.
This brings me back to a conversation. Well, it wasn't a conversation, it was a talk at a conference where Mr. Peter Bright, I'm sure you know him.
Yes.
So he was saying something about banks are we're actually going to have him on the pod, which is exciting. But he was saying something along the lines of banks are actually getting into mobile money because mobile money is actually cheaper to run. Because he mentioned something around the lines of running a bank is very expensive, for one. Two, looking at what M-Pesa, EcoCash, and all these mobile money platforms that we use every day, they actually need to get into mobile money. So I want to understand your take on fintech and this mobile money platforms. What does it look like, and what do you see in the future, especially as a finance person? What do you think? I'm actually very curious on what you think about all these mobile money platforms, because looking at every tech conference in Africa, there's always 3-5 pitches. Let's say 30% of them, they pitch mobile money.
Sure.
So, or fintech. I want to understand what you think about the future of, like you said, money is now digital. So I want to understand what you see in the future with banking and with fintech and Africa around money, actually.
Sure. No, I absolutely am very excited about fintech. I'm very, very excited about fintech because it not only makes it easier to transact, but it also addresses a big issue that we've always had, which is financial inclusion. So there's a lot of people who want to participate in the financial sector, but for one reason or the other, they are unable to. For example, previously, when you would walk into a bank, if you were not dressed in a certain way, people would not necessarily afford you the service that you needed, right? Back in the days, right? When you look at where we come from, where you used to sign a bank check, that will clear after so many days, Mobile money
until you don't necessarily need the money anymore.
Or by the time the check clears, there's no money in the account, and therefore it's referred back to the drawer. So when you look at fintech, it gives people financial access to financial services and products. It includes people who were previously excluded. It also helps the underbanked also participate. Underbanked are people who are participating, but they don't have access to the entire scope. So with fintech, people have access to savings. They have access to credit. They have access to insurance. They have access to digital payments, bill payments. They're able to participate. So for me, fintech is where it's at. And what I love about how the financial sector is growing, you see banks moving into insurance through their bank assurance facility. You see mobile money operators borrowing people loans and savings. You see insurance companies also participating. So it's a very interesting time for the financial sector.
I can actually start my own mobile money tomorrow.
And it's literally quick, fast. But for me, to answer your question, based on what I do as well, for me, what is exciting about the fintech space is the digital financial literacy aspect of it, right? So yes, there's technology. Fintech is changing the landscape, but are the consumers of these mobile money services, financial fintech services, are they educated digitally? Do they have the digital financial literacy? Because there is financial literacy standalone, then there is digital literacy standalone, now there is digital financial literacy. Do they know when I am clicking on this particular app? Do I know when I'm sending this money? So they need to be very educated to say that, am I skilled digitally to make financial decisions that could affect
all these platforms?
A typical example, a few years ago, when you used to send money with mobile money, for example, and you got one digit wrong, how big a hassle was it for you to get that money reversed?
You have to go to the police, a letter
you get what
from
I mean?
the chief notoriety for our international
Exactly.
audience. And then you have to go to the financial services provider, have them verify that you are who you say you are, and then it was a mess.
So when consumers have the digital financial literacy to understand the digital platforms, but also the financial choices that they're making, then fintech will be absolutely amazing. So I'm a big advocate of fintech.
For fintech.
Yeah, fintech. Also, what fintech does, it literally opens up the world. Back to what you said earlier on. If I'm able to send money from Lesotho to Kenya or Nigeria, and vice versa, it then means that access to products
takes longer.
Exactly. And it comes at a cost.
It comes at a cost. I've looked at our transactional, by the way, at MediaSpace we deal with international clients. I've looked at the transactions. They will tell you it's going to take a week.
Sure.
I didn't even know what's the point of a SWIFT until they told me, no, we have to get it verified, everything. I'm like,
exchange controls and all of those.
It literally takes half the month. You literally deliver the service, wait like 15 days, then you get your money. You're already literally working on actually delivering
cash flow, and then cash flow management comes in from a MediaSpace Inc. point of view. Yeah.
Yes, everybody. This is the MediaSpace Podcast. We are in conversation with Mr. TK, Tokiso TKay Nthebe, the finance bachelor and a trailblazer. And if you are new to the show, go ahead and still hit the subscribe button, the notification bell, and like button, and do it for the algorithm. If you're not enjoying the episode, go ahead and hit the like button twice. That still does help the
channel,
yeah. So, Mr. TK, tell me, what are other financial products that you see people either ignoring or overlooking, or they just don't know about and they could actually help them?
I think for me, before I even get to the products or services, right? For me, not just from a Lesotho point of view, but from an African and a global point of view, well, I think the first world countries are doing fairly well in that regard, not as well as they should be, but they're fairly ahead as compared to most African countries. So before we can even get to the products and services, number one, I spoke about inclusion, financial inclusion. Yes. We spoke about financial education and literacy. And the one thing that I think is lacking that can help us to fully enjoy the bouquet of products and services is the financial planning aspect of it. So financial planning is a discipline within the finance space that basically says at any point in time in your life, in your career, anything that could happen, you need to be prepared financially. Typical example, if you know that in the next 2 years you're going to university or you're still at university, it means that you need to have money for you to afford education and the tuition fees, right? And for you to build up that money means that you needed to have a financial plan in place. Fast forward, you graduate, you need to start your new job, right? Whether you're starting a business, whether you're going into corporate or the public sector. When you start your first job, now you are dealing with a paycheck, right? Paycheck comes with deductions. It comes with all these things. Now you're paying taxes. You're contributing to retirement if you are, and you want to buy a car, you want to buy a house, you want to have this lifestyle that I spoke about earlier on. That needs a plan. When you hit your 30s, you're thinking of buying your first property. You're thinking of getting married. You're thinking of having a child. You're thinking of all these things. Wedding costs money. Having a child costs money. So what do? Your finances support that. 40 is where they say life starts at 40. I don't know what that means. I've yet to experience it. 50, now retirement is in close proximity, and so on and so forth. So for me, the one thing, if we can get financial planning done, it means that we need to get that done. Because once you have a plan in place, the products and solutions will fit into those things. So there's a lot of products to choose from. Whether you're saving, whether you're investing, whether you are planning for retirement, whether you're taking debt, even just from a debt perspective, there's different buckets of debt. There's short-term debt, such as overdraft facilities and access facilities. There is longer-term personal loans, business loans if you're a business owner. There is car finance. There is mortgage or home finance. There's credit card. So there's all these amazing solutions that are available. But for you to fully appreciate those products and services, you need to have the literacy, you need to be participating, and you need to have a financial plan to help you navigate all of those.
Financial plan.
Financial plan. Financial plan.
Okay, then into the products that you see people overlooking.
So in the Lesotho context, the most popular product that people consume, and it annoys the living lights out of me, is funeral cover. People will have a funeral policy. They will have 5
things. I actually have a client in funeral services.
I love clients in funeral services, but the one thing that the misconception that people have is they think they need to have 10 funeral policies, right? And unfortunately, from when you look at an insurance point of view, is you are only allowed to claim up to a maximum, if I'm not mistaken, up to a maximum of 100,000.
Why?
Yes. It's how it works. So
for instance,
here's a person.
I want to understand for our listener.
Sure.
Say I have I have a policy with TK Funeral Services.
Sure.
And then I have a policy with BK Funeral Services, and then with Mashubane Funeral Services. And your payout is 50,000. His payout is 150. My payout is 5,000. And then when you put them together, they're way above 100,000. So what does that look like? What's the legal conversation?
So when they say terms and conditions apply, so a lot of the fine print, which people should read. A lot of people think that the funeral business is an investment. So I'm covering you, I'm covering him with the aim, the intention for taking that policy is when you die, I'm going to profit from that. The product is designed to say, in that moment when you've lost a loved one, you have money available to take care of that.
You don't have to worry about the money aspect.
You don't have to worry about the money aspect of it. So how insurance companies started embedding that into the terms and conditions is because it was becoming a profit-making business.
And people start killing people.
People start killing people, and we're seeing that, So they had to put controls and measures in place, which is where the terms and conditions apply. Also, if you've covered me as a family, you've covered me for 50,000, he's covered me for 50,000, my aunt has covered me for 50,000 over one particular life.
Different people.
Remember, it's also an industry. As much as these companies are in competition, but they're also operating in the same industry. So they also talk to each other. So they'll say, I have a claim from this candidate over this person's life oh, I also have a claim. So let's pay an aggregate of these claims so that the industry does not suffer as well. You get what I mean?
So it nullifies my claim because, well, he has already claimed.
They will find a formula that's beneficial to all of you guys, but it's not a profit-making scheme. So for me, the one issue is let's stop over-insuring, one, because you can use that money for other things. The second product that a lot of people aren't using effectively in the Lesotho context, and I think in the South African context as well, is investment vehicles. A lot of people are living from paycheck to paycheck. A lot of people have no savings for rainy days or emergencies. And the worst part is a lot of people have no savings for their future. Long term, medium to long term, they have no. And they think investing is expensive, and they think that you need to have a lot of money to start investing. What they're not realizing is you can literally start as small as possible as long as you're consistent and as long as you start early. And then you have the discipline. You can literally achieve and build wealth. So a lot of people are not investing. I think that's the one product.
Yes. I actually discovered one. I actually introduced it to my parents. My father was so excited about it. I told him, I didn't want to introduce it to him like, hey man, this is something that you should do. What I did was I threw in my personal money into it, and I showed him, look, this is how much money it's making me, and it takes 10 years for it to come into fruition. Like you just how I communicate it. I won't say it as good as you would, but what I say is I'm getting rid of this money because I know I would spend it recklessly. There are so many factors that get into spending money. I'm young, So what I said to him was, I have this much money. This is how much money I throw into this investment vehicle. This is this is the initial investment. This is monthly investment. And this is how many years it's going to take me to actually get out of this investment. It's not as, and the interest is actually higher, the return on it. And then I told him, you could do this too, and it's actually going to be better than just saving money with your bank account. Because it's actually better to do it with an investment vehicle. So I do agree with you that I was actually surprised there are some things like that. So now I'm telling it to everybody, like, you should use this company. They do A, B, C, and D. You can throw in your money in there, and it's gonna come back. Yes, and by the way, it's not gambling.
It's not,
because it's I think it's very well regulated, because it's basically what's, I don't know what's the right word.
I think just for the benefit of the audience, right? In the Southern African context, for example, we have different options. Banks do have some sort of medium to slightly longer term. The returns will not always be as great as they should be, because banks are really banks, right?
Are banks exposed into the marketplace? Like, do they invest?
Do. Okay. They remember also banks. TikTok, we have what we call finfluencers. And for me, finfluencers are doing.
You a finfluencer? Yes.
I'm always very hesitant to answer that,
well, here's the thing. There's always ethical ways to be something.
Absolutely.
That's why I'm saying, yes, you are.
Yes, I am. Yes, I am. So for me, I love influencers, right? They have basically made financial knowledge accessible, and they've removed the jargon, they've removed the hectic terms. So they're doing a very good job. For me, what you see and hear from a finfluencer, you can't make a decision based on a 59-second video. That person is basically sharing a concept. Yours is to sit down, do more research, and then get the advice that you need. So a lot of people, the mistake they make is they want to consume and make decisions based on a 59-second
clip. Okay. Taken out of context.
I was about to say context. Which country you're operating in. If I'm in Lesotho, the laws that govern the financial services industry in Lesotho are very different. They may be similar. They're very different from the ones that govern South Africa, Namibia, Botswana, Kenya, Nigeria. So back to that question again, where you were asking about security and if it can exchange it everywhere. Exchange controls from countries to countries differ. There's anti-money laundering regulations. There is exchange controls. There is different laws, tax laws.
Different in every country.
Tax laws. The laws in Lesotho are very different from the laws in Nigeria. They may be similar. So the context of the country. So beautifully on TikTok or on social media, you are watching this video. Where is this influencer shooting from? Is it the US? Is it Lesotho? Is it Africa? Where in Africa? So people need to, yes, consume the content, but also be disciplined and responsible enough to go seek professional advice. At the very least, go do research. Google is your friend. Information is available in abundance.
The nuggets you're taking, BK.
I have so many questions.
Please.
Go ahead, ask.
But I'll ask 2 questions. Okay. The first one is about credit score.
Sure.
Let's start with that one. Last year, for about 4 months, I went to South Africa to learn more about the
business that you're in.
Yes,
He's actually into a new business.
Oh, nice.
That's
nice.
fire.
So I had to work for free and also on commission, and I came across the credit score thing.
Sure.
Right. So I don't know much about it. But then as a Mosotho, I'd like to consider myself an average Mosotho. So I'm speaking on behalf of them.
Everybody.
Yes, I'm speaking on behalf of them. We learned that, I learned through my clients that right now, credit score is really low for a lot of people.
Yeah.
I hear it was affected by the
COVID-19
and global pandemic.
Sure.
And then secondly, a lot of people don't know what a credit score is, right? Thirdly, when you've been blacklisted, for example, you want to buy a car, right? You go through that process of
rehabilitation. Yeah.
So my question is, how do I build a good credit score?
I love that question.
Right?
Yeah.
I have a bank. I just started putting money into my bank. Does that affect my credit score as I continue to put money in that? Or do I strictly have to borrow money from the bank in order for me to have a credit score? Now, here's my second question. I don't know if you want to answer this one
Let me answer this one first because it's got a number of components. But don't forget that one.
Okay.
So a credit score is... There are a number of things that impact your credit score positively or negatively. The easiest low-hanging fruit, right, is how you conduct your account, right? So the number of days money stays into your account contributes. I think FNB South Africa, for example, did a study where they found that people, after they get paid, 80% of their income lasts longer than 5 days. Not longer than 5 days. So you get paid on the 20th. By the 25th, 80% of your income is gone. And you're surviving on 20%, right? So how long you keep your money in your bank account, that says to... Remember I said debt is psychological, right? So the bank says, oh, this person is not really desperate for money, right? The second one, which is important, so account conduct is very important. A big mistake a lot of young people make is they treat their bank accounts like trash. Money comes in, they don't provide for bank charges. So if you don't pay, if you don't pay, imagine going to a restaurant, you eat and then you don't pay for the meal that you had, right? So it's the same concept when you are using a financial services product. There comes a fee. There's a maintenance fee. There's
staying
all
on
these
negative
things.
balance all the time.
Staying on negative balance.
You get 5,000.
Those bank charges. 5, it basically says to this person, you're treating this as trash, so I can't trust you with my money, right? You don't respect that the service. You're not paying for the service that you're getting, so I'm not going to respect you for that, right? Number 2 is if you borrowed money anywhere else, right? Whether it's a clothing store account, whether it's money from another financial services provider, whether it's a car or what, cell phone contracts, all those things that, remember we said credit is a cost. If you've never paid them back, there's what we call a credit history. So as you're transacting, you are building a history of the type of payer you are. That comes into place. So for students who take loans in varsity and don't pay in the back, it catches up with you.
Do people do that?
They do. They open clothing accounts. They do all these things that they're doing. It comes back and it catches up with you.
Maybe I'm very ignorant because I've never... Maybe I wasn't exposed to it. Like students in varsity...
Cell phone contracts, clothing accounts. Yep. They also have manpower. Yeah, so your credit history is very, very important, right?
Oh, because that one, I haven't paid it.
It's your history. Again, remember we said
so
history.
It
reflects, and there's a record of it, guys.
Oh my!
There's a whole bureau. So all these financial services providers input your information into this database, right? The third one is how you're using debt. So, for example, if I have a personal loan, a credit card, a micro loan, a cell phone contract, that mix also says what kind of person you are. Because if you have too much of it, it says to the financial services provider that you're desperate, right? How you constantly check your credit score also says to the credit lender that Mutwenwana needs money, therefore they're desperate. So if they're desperate, chances of us getting our money back are very slim.
So are we going to be scientific about the money?
It's very scientific. That's a beautiful thing. When you spoke about an algorithm, it's very scientific. So as you're transacting, you are forming all of this, right? The fifth one that I want to mention is what we call credit utilization. For people who are employed especially, or business owners, right? If you have, let me use a credit card as an example. If you have a credit card and your limit is 10,000 and you constantly use 10,000, it says that this person is desperate, so we can't trust them with money. So utilization, you always want to be operating at 50% of your limit, and you want to pay it back as quickly as possible so that the person sees that you are committed to this and you're using it responsibly. So those are the 5 factors that affect your credit score. And if you want to improve them, you start working on all of them one by one and hopefully get into where it is.
So a money discipline is a scientific.
Money discipline. Money discipline.
Wow.
Money discipline.
I've never really paid attention to how scientific a relationship with money is, because here's the thing: you grow up into, you gotta make the money, you gotta finance A, B, C, and D, but you never really look into what happens if what happens if I'm expecting a very huge transaction, but I don't have the money now. What happens if I need to finance something that's an emergency? We never look into those. We just look at, I gotta make the money. When I get the money, I gotta spend the money, and then I gotta invest money. But what does that mean?
Exactly.
So most people will look into this conversation and say, there's a lot of things I don't know about money. So what would you say to a person who just wants to care about their financial health? Is it?
It is. It's actually a term. Yeah, okay. It is. So I'm like, he's done his research. I love it.
Okay, so let's say I want to care about my financial wellness, but I don't know where to start. For one, I hate reading, but I enjoy video content.
Sure.
Yes, watch my money adventures, watch content on the internet, maybe watch Dave Ramsey, but I want you to give us the advice for, not financial advice, but I want to get into caring about my finance, but I don't know where to start. I just got a new job. I just got all these new things. Maybe not necessarily I just got a new job, but I just want to care about my financial wellness. What would you say to a person like that?
Oh, I love that question. First and foremost, listen to the MediaSpace Podcast. This episode is loaded with a lot. Number one.
There's a lot of learning.
Number two is, before I even get to the how part, it starts with really and honestly being honest with where you are. I believe, and I've seen, that a lot of people lie to themselves about their financial reality. They lie to themselves about the financial reality. I've asked people, how often do you check your bank statement? Do you have a budget? Do you know where your money is going at any point in time? Do you have savings for emergencies or anything that could happen? And they will lie to you with a straight face. So the first thing is, stop lying to yourself and acknowledge where you are, because when you acknowledge, then only change can begin, right? Once you've done that acknowledgement, the third one is to forgive yourself. If you've made a lot of mistakes about money, forgive yourself. It's in the past. The future, you can correct and you can change the trajectory of your life and your finances. Number 4 is education. Follow TK on all social media platforms, TK Consultancy and financial wellness on all social media platforms. My Money Adventures is loaded. The podcast is loaded with content, both on YouTube and on audio. Get a copy of Let's Change the Scripture. It's a personal finance book. There's a blog post. So follow all the people who speak about money. And not because we think we are better at money, but because we are talking from our experiences, the experiences of our clients. So the content we create is relatable. invest in yourself in terms of go to webinars where they speak about money, go to conferences that speak about money, go to events that speak about money. Because when you are around people who are talking about money, not only will you be able to learn how money works, not only will you know how to make the money, not only will you learn how to keep the money, but you also know how to invest that money.
Okay.
And the magic happens when investing comes, because that's how you build wealth.
Okay. Back to the point of credit score.
Yeah.
Before you ask.
Oh, the second question. We almost forgot about the second question.
I'm going to forget this one.
Oh, wow.
Back to the credit score conversation. Say I run a very successful business. I don't have a really good credit score. I don't know if it's contextual or not.
Sure.
But I want to understand. Say I make a lot of money every month, but it depends. Someone said a lot of money is different according to who you ask. So let's say I make 1 million maluti per month net, and I never really checked my credit score. Does it really matter if I'm consistently making that much money, or it still matters whether or not, or is credit score only important to people who just are looking into getting credit?
Not necessarily. So I'll go back to the example again. So you're making all this money, right? You come to my front door and you knock and you have all this money and you tell me I have all this money. I want to get into your house. Am I going to let you into my house?
Yes, but I have the
Answer the question. Is it a yes or no?
Okay, no.
I don't know you. Exactly. I don't know you, right? So with that context in mind, a credit score, yes, it does have a lot more weight when you're looking for credit facilities, right? But it also affects so many other aspects of your life. I want to make an example with a friend who's Mosotho, who is now living in New York, in the US. He was struggling to get an apartment, and he has an income, and he has a stable job, and he has all the things that are right, but he did not have a credit score. So he was struggling to get an apartment because the credit score, people were like, you see, you look good for the money, but you have no credit record. You have no credit history.
We've never borrowed money.
We've never borrowed money, so we don't know if we can trust you.
Yeah.
So the credit score is simply about trust. It's a measure of trust that people use as a benchmark to say, can I trust you? So you can have all the money. Yes, the amount of money will also matter, and who you're speaking to will also matter, because then you can influence certain things. But remember that the credit score is an algorithm-based or a scientific measure that looks at your pattern.
Global.
I don't want to say it's global per se. Again, context becomes into place, because a credit score in Lesotho, how they measure it will be very similar to to South Africa. So, but the context, the laws that govern credit will differ from one country to the other, because interest rates will also be very different. So it will also be contextual to where you are. But the fundamentals are more or less the same. So I can't say I have a credit score of 850 in Lesotho. I need to have a record in the country that I'm in, because they have the rules and regulations that govern that as well.
But how do I get credit in the USA if I have never had? I don't know, because I cannot borrow.
I get that question.
I cannot borrow in the US.
Yes,
because I don't have a credit score.
Exactly.
But for me to build a credit score,
I
need to have
credit
borrowed in the US.
So that's where now those products come in that you spoke about earlier on, to say what products are suitable to help me achieve that in that particular jurisdiction, and how can I participate?
Okay.
Do I need to register a company in that jurisdiction? Do I need to do this? Do I need to do that? So it will differ from company to company, from country to country, from product to product.
Okay, interesting. Yeah. Your question, sir.
I hope that made sense.
It does make sense.
Yeah.
Okay, I also want to make sure I understand what you're saying.
Sure.
On this one. So basically, if I'm going to move to America and live there, and like your friend, say I want an apartment, and then all the facilities to take care of me, like the basic needs, right? I'm gonna start my credit score from scratch. That's basically what you're saying. I'll
say yes and no.
Okay.
Again, data is also accessible because we live in a global environment. So sometimes you don't necessarily have to start from ground zero. Sometimes your bank can also speak to the other bank to say that this was our client, this is how they conducted their affairs. So I don't want to completely say, no, you have to start from ground zero, because it will differ from bank to bank, from organization, and contextual as well.
Okay.
Yeah.
Okay, that's what I wanted to understand. So I have a second question.
Please.
Second question. So let's talk about insurance. We're talking about insurance. Like you said, because when you mentioned that a lot of black people, especially in Southern Africa, they're paying so much money in the
funeral cover space, funeral policies, yes.
And for me, it's also one of those things that never made sense. It really, really never made sense. I will say I'm not really fond of banks. I'm not really fond of insurance.
From today, you have to make a relationship.
Yes, it's important because I'm not as naive as I used to be. I know that I need insurance. I know that I need a bank and banks and those services in order for things to flow how I want them to flow. Right? But taking it from a person who prefers cash, right? I like cash because when you have cash in your vault or in your safe, it's safe. It's there, it's like that, but then it's not really multiplying, right? So now we're working for the next generation. For me, I'm building a legacy. That's how I like to define it. So speaking of those policies, I'm going to talk about three. There's funeral cover, and then there's medical insurance, and then there's life insurance. Right? So this one, it's for me, it's poor. It's a terrible thing, but I find that a lot of insurances are pushing it because it's more profitable for them. So and then secondly, there's medical insurance. I don't know how that one works. I just know that when you're sick,
they just rush you to the hospital for free.
Then they pay, but then usually you find that when you have a medical cover, they can only cover to a certain point when you get to, say, Maseru Private. Yes, and then you have to pay cash
to a specific hospital.
And there's also something I heard about life insurance through the TikTok.
I think I saw that.
Yes, I want you to confirm on this one. I heard that you can use life insurance to transfer your wealth to the next generation. So I want to understand if that counts for us in Lesotho, and how does that work?
Okay,
let me add to his question. Not to change the context of your question, but I've also heard from finfluencers that if you have a life cover, you can not necessarily for the future generation. If you have a life cover, maybe it comes down to what a life cover is. But they say the finfluencers say if you have a life cover worth 1 million, you can take a loan against it. So yeah, that's what it takes to run a podcast. Everything just falls into place. That's what I mean. Okay, back to the questions about life insurance and investing against your life insurance and what it means to actually have any life insurance and transferring the wealth to the next generation.
Loaded question, but I'm going to try to simplify it as best as I can, right? So the first thing that I said, the first thing that I want to say is, let's also understand what insurance is, right? Insurance is a risk mitigation strategy. So you are saying, in the event that this happens, or in the event that that happens, I need to have something available for me to be able to cover that, right? You can self-insure, where you basically say, I'm going to keep money into my bank account, or put it under my mattress, or put it wherever it is, should that thing happen. That thing can be a car accident, it can be a medical emergency, it can be your house burning down, it can be malicious damage to whatever it is that you're doing. So back to the financial planning thing that I spoke about earlier on. The whole idea of financial planning is you are accumulating assets and you want to build wealth and you want to leave a legacy, right? So insurance says that you need to have something to protect the very same thing that you are building, right? So in the short term, we speak about insurance such as car insurance, house owners insurance if you have house, if you have a home, house content insurance, including your electronics. So electronics, your laptops, because if somebody if somebody was to steal your laptop, your camera, or your data, you lose the data on any of your things.
That's one of the most. That's one thing that I fear the most. The data.
The data. Yes,
you can replace electronics.
Exactly. You get what I mean. So you're saying, in the event that something goes wrong, I need to have a cover in place. So risk managers, and I'm not a risk manager, risk managers talk about risk avoidance, risk mitigation, risk minimization, risk transfer, right?
Okay.
Risk transfer is where you transfer the risk to a third party in exchange for a premium so that you have peace of mind, right? So in the short term, we spoke about car, home, house contents. House contents is where you have your TV, your fridge, your couch, your clothes, your jewelry, your shoes, your sneakers. If those things are of value to you, and if you were to lose them, would leave you in a financial mess, then you'd want to take out insurance to protect them.
The contents of
of those, right? If you're a professional, for example, I'm a financial advisor. If I was to give you advice and I gave you the wrong advice, I need to also be protected. So that's where I'll take a professional indemnity cover to say that I'm covering myself and my business against the advice or malpractice. Doctors as well, lawyers as well, marketers, engineers, people who give professional services, they can protect themselves by taking out professional indemnity cover, for example, right? So those are professionals. So these insurance is meant to protect whatever it is that you're making. When I said earlier on that insurance is not an investment, it's a risk management strategy to say that I'm covering myself against any potential risk that could lead to financial loss. Via malicious damage, via accidental damage, or theft, right? If my car was to be lost, if I bought the car cash, I spend 100,000 maluti on it. If somebody stole it and I didn't have insurance, it means that I am 100,000 worse off, right? Whereas in exchange for a monthly premium paid, or in exchange for a premium paid monthly, quarterly, or annually, I am transferring the risk to a third party so that I have peace of mind
in case
that happens, right? So the whole point of short-term insurance in this context is to, what we say, indemnify you, simply meaning that they will bring you back to where you were before that particular incident happened so that you're not worse off, right? So the other one is what we call life or long-term insurance. So this particular insurance protect you or cover you in the event of chronic illness, loss of income, death, or disability, right? If I am TK, I'm a podcaster, and I lose my voice, or if I'm TK and I die, or I get diagnosed with a chronic illness, or I am permanently or temporarily disabled, it means that my earning potential is affected, right? So you'd want to cover yourself against those eventualities. So to his point, there's what we call a life cover policy. A life cover policy covers your life. So in this particular event, Tokiso is the breadwinner. Tokiso has dependents that rely on the income that I provide. If Tokiso was to die, there needs to be a payout so that the dependents can still, at least in my absence, afford the quality of life they were accustomed to. That's where a life cover policy comes in. So how we speak about generational wealth transfer, it means that because I'm no longer here as a breadwinner, the legacy or the wealth that I'm leaving is I'm leaving them with money so that they can have a quality life. And where the wealth creation comes in is now you also need to be thinking, if I'm leaving X amount of money, will these people use it strategically so that they can do that? So now there are very different strategies you can deploy. For example, you can set up what is called a trust, not a trust fund, right? A trust is a legal structure that says I'm putting these assets into this legal entity, and the beneficiaries of this trust are 1, 2, 3. They do not own the assets, they enjoy the benefits of that assets. Example,
so
I've transferred the trust.
Because I'm no longer here.
The trust.
Okay.
The trust is a legal structure. So there's who governs that. Then you appoint what we call trustees. So trustees are independent people that you believe have the best interest to execute your wishes as outlined in what is called a trust deed, right? Alternatively, if you don't want to set up a trust, you can say, I am going to leave these benefits and distribute them via a will. So that will is your last will and testament to say that I am leaving X amount of my money, X amount of these benefits to Tokiso, to so-and-so, to Tabiso, to so-and-so, and so-and-so, on condition of. You can also add clauses and conditions to it. right? So that's a wealth management strategy. Funeral policy is meant to cover the funeral expenses. And the beautiful thing with a life cover is some insurance companies allow you to embed the funeral cover into the life cover policy, right? And for me, I always say, if you are taking a life cover policy, right, the younger you take it, the better, but also embed chronic illness, chronic disability, so that should you be disabled before you die, remember, a life cover policy pays out only upon death. So should you be diagnosed with a chronic illness and you're not dying yet, if they lay you off at work, you still need to be able to earn an income. If you are involved in a car accident, God forbid, and you are permanently or temporarily disabled, and you are no longer able to earn an income, that's when the payout comes in to protect. You know what I mean? There's the last one that you mentioned. Life. Can you take
a loan
against this? Remember, for me, is a lot of financial services providers will not necessarily take a loan because the product is designed to say, in the event of you dying. So unless you are dying, they can't claim, right?
But can they claim? Let's say I die and I have a life cover. Can they take them? Because
So usually where life cover policies come in, especially when you're financing a mortgage, so you're taking a home loan, one of the requirements will be, for this particular home loan, we want to have a funeral cover policy, not a funeral cover policy, a life cover policy attached to this. Because should you die and the home loan is not fully paid off, the bank can claim against the policy, pay out the remaining balance of the mortgage bond, and then the remaining balance is paid out to your beneficiaries or your dependents, right?
So my dependents are going to be paying for my...
No. So let's give it a context. Let's give it practical examples. So I have a home loan of 2 million, right? I paid up maybe 500,000. The balance is 1.5 million, right? So I have a life cover policy that I've ceded or transferred my rights to that policy to the bank to the value of 2 million, right? So I owe the bank 1.5 million. My cover is 2 million, right? So the bank is going to claim against that policy. The insurance company will pay out 2 million to the bank. 1.5 will be used to clear off
the debt.
The debt. The 500,000 will be paid over back to their dependents.
Because it's a surplus.
Right? Plus the house. So the whole point is to say, banks are saying, we do not want to take away property that is meant to take care of the dependents in the event that the breadwinner leaves. So for us to mitigate that strategy, we will take or demand or ask for a life cover policy. So that's another wealth creation strategy that you can do.
Money is very scientific.
It's very scientific.
Because I'm thinking, a layman would say, I don't really care about having a financial advisor. I have a very wealthy friend who were in a banter, and then he said, one of them was like, I actually have to go to South Africa, to Bloemfontein, to meet my financial advisor. And the other guy was like, why don't you be your financial advisor, dude? I can be my financial advisor.
Sure.
So I took that advice because, well, he's wealthy. And listening to you talk about money says a lot about the like you said, your money relationship is basically psychological. It's you with money. It cannot be a blanket statement. Say people like this have this relationship with money. So listening to you talk about money says to me, not necessarily me, but we should have financial advice when we make money decisions, because I don't have context. I have the money. I need it to be valuable to me.
Sure.
And I don't know where to spend the money. And I'm looking at the time, and we are basically leading into the end of the podcast, the episode.
Powerful conversation, by the way.
I'm enjoying
powerful
this.
conversation.
I feel like,
well, at least I hope so.
It is. By the way, we don't do this for the views. We do it for, you could go back to this material.
That's what I love about this podcast.
Tchelete has a parcel. We've been sent out by our parents. Go and tell so and so to give me the parcel. What is the parcel? No, she knows, you know. And my takeaway from it is money is not embarrassing.
Sure.
I actually made a post on LinkedIn. I don't know, maybe it was 2022 or 2021. I took context out of the money has a parcel. Was it 2021? When did you publish the book?
2022.
In 2022, I remember seeing the title and then saying, this says to me money is not embarrassing, because I was actually reflecting to, you know, when you talk to a person and they owe you money, and then you talk, you are beating around the bush with the money. You're like, you know, you should not forget me, you know, and then you're like, you don't want to say, you should pay me.
You should pay me.
You owe me this much and I need it by. You know, you don't want to get into that conversation, but I want you to get into why did you write money is not a parcel, as a parcel to our local audience.
Cool. So for me, like I mentioned earlier on, I love to write. I've always been blogging, right? Mm-hmm. And following the launch of the company, I started doing a lot of speaking engagements, workshops, events, and so on and so forth. Mm-hmm. And the one thing that was becoming very evident was I was getting more or less the same questions from the different audiences. Mm-hmm. And because I was starting out, I could not be everywhere all the time, and I could not be there long enough to answer all the questions. Mm-hmm. So, Tchelete se pasile, let's change the script. Tchelete se pasile simply means it is time for us to change the script and start talking and having honest and open discussions about money. Right? Uh-huh. Growing up, a lot of our parents, my parents as well, used to say, Tokiso, please go to Hamematshepo and collect a parcel. And I would go to Hamematshepo, get there with an envelope, brown or white, take it back to my mom. Not knowing that it's money. Sometimes my mom will give me, or my dad will give me money in an envelope to go to the bank. And then you realize, it's money you carry it in a particular way. But for me, what was important is because we don't really speak about money, we don't see money, we don't call money for what it is. A lot of us are embarrassed and we are shy, and we it's a sensitive topic that we don't speak about. Mm-hmm. So when I say let's change the script, Tchelete has a pasile. Tchelete simply means money is money, and let's call it that. Money. You know. So the book covers a lot of topics, from the mindset to asking you and giving you strategies on how to become financially healthy. Mm-hmm. It touches on debt. It touches on savings. There's a big difference between saving and investing, by the way. Mm-hmm. It touches on investments. It touches on retirement, estate planning, taxes. A lot of us do not talk about taxes. We didn't touch on taxes today because that's a topic for another day, right? So the book is really all about, it's written in a very fun, engaging storytelling way about this character called TKay and how he navigates his money adventures. And
now I'm looking forward to reading
TKay has a lot of challenges, yeah? The TKay are literally mad. You get what I mean? Yeah. Okay. So yeah, it's really simply meant to spark conversations, shift ideas, and get people thinking about money in a very positive. And I think for me, it's also worth mentioning that the book is written in English, though there are bits and pieces of Sesotho which are translated, which have translations in the book. Mm-hmm. But it's written about Maludi and Ludi, because I also got tired, LSL. I got tired of reading about South African rands or the US dollar or the euro, the British pound, and I wanted to relate a book to an ordinary African who can understand and the context of the African story, you know. So that's about the book.
Listening to you talk about that bit is going to be very viral on TikTok. Okay, I want to stack everything into this few minutes.
I can do that. I can do that.
So, Escapes with TKay. TKO Financial Advisory, and your second book.
Okay, second book. So the other two books, Descender to Maholo and My Money Adventures.
I didn't think you wrote Descender to Maholo. Now I know you.
Yeah, I wrote it. So those are basically planners. So after you've read the book, now you need a tool to help you do what we say you must do in the book. So those are planners that basically help you navigate your finance. Cents to hundreds or pennies to pounds, you know, if you're in the UK. So the Descender to Maholo is basically that. My Money Adventures is an extension of the podcast to say that you can listen to the podcast, you can watch the podcast, but now you can also engage with the content physically or digitally, right? So that's where that comes in. TKO Financial Wellness is basically a financial planning and a financial advisory and a financial education company that provides corporate wellness programs that helps people navigate the finances. We provide coaching and financial planning. So we are licensed by the Central Bank of Lesotho. Boop, boop, boop. So we're very compliant. So we basically help you navigate the money adventures.
Finance is a very regulated industry.
Very regulated, and
It's
rightfully so.
legal.
Rightfully so, because you are basically dealing with people's livelihoods and people's futures and people's lives. And then lastly, Escapades with TK is basically a podcast. Firstly, it was a YouTube channel, now extended to a podcast that basically summarizes my travel and lifestyle adventures. But the direction we are taking for 2024 is we want to change the script again. People think that travel is expensive or travel is for different races but not black people. So through this, I share travel tips, I share travel hacks, I got a comment today to say, how do I start planning for my trip somewhere? So the budgeting aspect of it comes in. When you're traveling, what do you do when you get to the airport? Travel insurance. What do you do? How do you pack? How do you book accommodation and all of those? So that's basically the other side of me. Remember I said I was a double major, finance and travel person. And tourism. So this is me saying, how do we spend our money? Because that other channel speaks about making the money and planning for it and saving for it. This channel says, now you've done all the right things, enjoy your money, because it's also very important for you to enjoy the money.
I'm going to do a lot of international travel this
Please.
year. So I'm going to have to actually engage with
Please.
TK.
Please.
Okay, that's it from the pod. I don't want to take longer because we're already interrupting another show on Biketlo FM. And we are very grateful to Biketlo FM for being very patient with us, because the podcast is a different game, especially in the landscape that we are in, competing with
big ups to you guys. Big ups to you guys, and keep growing.
And this is a very exciting endeavor that we've gotten into. I know we didn't cover everything, and we hope you will spare us your time next time. In the future, have another episode with TK.
Call me anytime.
We would love to have you on the pod and actually talk about, we've talked a lot about money, and I'm pretty sure we haven't talked about everything. And I think we should have last sentiments from BK and then from you, and then I will close.
Sure. Oh, yeah.
Okay, I don't have a lot to say right now. I think I do, but
we don't have the time.
We don't have the time. I should say this. I think what you're doing for us as Basotho is very important.
I think it's
Thank you.
Very, yes, it's changing a lot because we do reference you when we're learning more about money and everything. Personally, that's what I do.
Sure. I do that too.
Thank you. Amen.
So
I find myself saying, I heard TK say this something somewhere.
Oh,
exactly.
So you're doing great.
Thank you guys. Thank you. I appreciate
especially
that.
the book, the title, Chelete Hustle Hustle. That's very, very, very important because it's locked into our mindsets. It's something that we are aware of, but we don't know how to get rid of.
Sure.
You understand? So I hope next time when you do come, we'll take the steps on how to break the psychology.
Please.
And travel. He actually has a bigger and better mission because it actually goes psychological, even with travel, even with money and
lifestyle mindset. Yeah.
It goes a long way.
Yeah.
So please continue doing this for us. Please,
we need this.
I also know that you two were not doing this for views. More especially the first time when we met.
Sure.
You did mention that you were doing this for views because you didn't have as many views as
still don't.
But you're still continuing.
Sure. I love it.
Value you leave behind.
Yeah.
Exactly. And you remember that's what I was telling you.
We were talking about it earlier.
We're not supposed to be caring much about the views.
When we started, I told the team at the office, like, dude, what we are doing here is basically leaving behind the value that we can say, okay, but by the way, in conversation, by the way, this is what we are doing, and we feel like we can do more of this.
Sure.
So about the views, is it really about the views? If we are talking, things that are about the views are sensational. This person did this, etc. But we are more about impact and what we can actually do and change in solving problems in the real world. Your last sentiments, where can we find you? Why should people listen to you, etc.?
All right. I'm on all social media platforms. Head over to my YouTube channel, podcast, My Money Adventures. podcast. It's on YouTube, Spotify, Apple, all of that jazz. Escapades with TK. If you are looking for travel content, it's also on YouTube and Spotify and Apple Podcast. And then, of course, follow me on all social media platforms. My closing remarks in the 10 seconds left is financial prosperity is our birthright. So each and every single Mosotho can achieve financial prosperity. In order for us to achieve that financial prosperity, however way it looks for you as an individual, as a community, as a family, we need to change our bad money habits. We need to change the script and we need to do better. If you respect your money, it will respect you back. Money is purely energy, and you dictate how and where it needs to go. Thank you.
Awesome.
Yeah.
That's
tangible energy.
Yeah, whoever is coming next, they have to step up their
No
game.
competition, no pressure, guys. And big ups to you guys for the amazing work. It takes a lot of work and money and resources to pull off our podcast. So I'm proud, and I'm happy to see more podcasters coming into the space and hopefully growing the industry. Because the more of us, the more we do, the better quality we produce, the better for the industry. So shout out to you guys.
Thank you very much. Yes, everybody. And if you're listening on the audio pod, thank you for listening this far. If you're watching, thank you for watching this far in the podcast. Can you zoom in on me so that I can mention our sponsors? This episode was sponsored by absolutely nobody. Thank you very much for listening, and we really look forward to having you in the next episode. And thank you to whoever is watching, who has liked, subscribed, and been part of the conversation with TK. And we really hope to have him again on the pod. It's me, Mr. Mashubani, and thank you very much for watching. See you next time. This was brought to you by Biketlo FM 104.0 megahertz. And if you are an international follower of the podcast, go to www.biketlofm.co.ls. And if you want to learn more about the podcast, go to www.MediaSpace.inc/the MediaSpace Podcast. Thank you very much for watching. See you next time.
Cheers, guys.